some of you are still just trading location. Like, you think that a location is the important thing over everything else. Location is important, but you don't trade location. And I think some of you are making that mistake. You're trading a location. What do I mean by that? So what may have had Laura saying, why is that bounce? Isn't that bounce near the 200? But you don't, some of you would just buy just because the stock drops to the 200. That's trading a location, but you don't trade a location, you trade a stock. So if you start to get that, if you start to get that confused, and you start to leave the idea that I trade the stock and you go to I trade the location, you're going to be a losing trader. Locations don't work by themselves. It depends on how and from where this gets to the 200, whether this becomes a play or not. All right. So if this dropped violently to the 200 and then bounced, that's a shortable bounce, right? Because of the violent nature of the drop. But if it did this instead, check this out. So it came from here. Now that's a beautiful buy off the 200, right? Or it did this. So it did something like this, like boom. That can be a nice little buy. But if you just drop straight down to the 200 violently, even that bounce is shortable. You know? So don't confuse just the location with the stop. You're really still trading the stop. All right. Um, hmm. What it's you can't rush experience. I'm aware of this. You need experience, guys, but you can't rush that part. And experience is actually in your hands. I can't give you experience. I can give you knowledge so that you can take that knowledge into your experience building period, right? And you can make sure your experience building period is the most productive, is producing the growth that it's supposed to be producing. But I can't give you experience. That's in your hands. But what gets a lot of developing traders are the exceptions. And I want to make sure you don't fall victim to the exceptions. So if I tell you that buying after a sharp decline down is a mistake, right? So here's a sharp decline down. Let me show this to you. Boom, boom, boom. Buying here is typically a mistake, right? That it's best to wait for the short opportunity and play this leg down. okay? And I say that this will happen 80% of the time. That a bounce right next to a power move down, this bounce is usually a failed bounce. And I say this will happen 80% of the time. That means that you'll have 20% exceptions. You'll be able to show me bounces after sharp declines that worked. And for whatever reason, a lot of developing traders believe in the exception more than the 80%. So they place more attention on the 20% exception than the 80% that it works. It's right. I don't know where that comes from. I don't know why. Why is it that the exceptions seem more important than the 80%? I don't get it. But that is what a lot of traders do. Roku is an exception. In a way, I mean, this is a very powerful bar, so I'm okay with a trader giving this a shot on the long side because on the power of this bar. But if this bar weren't as powerful, I would not like it as a play on the long side. I wouldn't, because that usually fails. Right? The only thing that makes location disappear and everything disappear is violence. This is violent enough to just make the whole thing disappear, my opinion. But you know what I'm saying. You can't let the times that you see something not work make you think it's not valid. All right.